Investors are getting a dose of volatility in the markets we've seen over the past few days. It's Monday, February the 24th, and this is Markets with Megan. Don't forget to subscribe, like this podcast, hit the alarm bell, and you can always share this with friends, family, or colleagues. Let's dig into what's been moving the markets over the past few days. Today's investors are getting a little bit of reprieve. The markets rebounded a bit after a pretty dismal end to last week. Last week, we saw the Dow Jones Industrial Average post two back-to-back days of a decline of 1% or more. That was the first time we've seen that happen in 6 months. The S&P 500 did hit a record high, but it retreated. And we actually saw both the Russell 2000 and Russell 2500 go into negative territory year to date. So why did all this happen last week? First of all, we've gotten some pretty weak economic data, not just on the housing market last week, but also the consumer. Consumer confidence is falling pretty rapidly, and we're seeing this reflected in the retail sales we got for example, January that saw a surprising decline. We've seen earnings downgrade. Walmart really set the tone last week, and we had this in a prior podcast about the consumer behavior and their concern about consumer spending this year. Seasonality also is a challenge for the markets. February tends to be a weak month, and that's replaying again this year. Inflation. We've gotten several economic reports that show consumer expectations for inflation are surging. In fact, in the University of Michigan survey, we saw that 5 to 10 year inflation expectation jumped to the highest level since 1995. Valuations. This was what we talked about coming into 2025. The valuations in the equity market were just pricing in not only a perfect soft landing, the Fed coming in and cutting interest rates, and then a seamless transition for the Trump administration. All of this has gotten quite cloudy over the first 8 weeks of this year. Lastly, this political uncertainty is weighing on sentiment. This is not unexpected. We knew that there would be a pickup in volatility when Trump took office because, similar to his first term, he's hit the ground running in an aggressive manner. He's signed more executive orders than any president in history in just the first month in office. So it's creating some uncertainty from the business perspective. Our businesses wanting to spend with all of this uncertainty from tariffs going forward as well. And then consumers are concerned about inflation. So this is what tariffs may do with inflation. So this is filtering into, obviously, the sentiment, and then we're seeing it start to filter into sales. We're going to continue to monitor these developments. We expected volatility. We've got some dry powder on the sidelines to put to work in our clients' portfolios, but this is a very fluid situation. We remind investors it's the price that you pay for the investment. What's the appropriate price? In this environment with so much uncertainty, don't overpay for high valuations. Be smart, be patient, and be disciplined. That's what we're doing for our clients. We'll be back this week. We'll have more economic data and more market reactions with the Markets with Megan. And if you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.